Speaking again here with Mark Collinsworth of Vere Global on the end of this week of the stock market, which didn't end on Friday, but on Thursday because it is Good Friday today. So, Mark, up to Thursday, how did the market perform this week?
The market actually had a fairly large lift to it. It's actually the best performing week in almost 45 years.
And why was that?
The market indexes were up. I don't have them off the top of my head, but they were up a good bit amount.
But you're saying a big part of that was that the Fed has announced that it is now going to buy junk bonds?
That is correct. The Fed yesterday actually announced a little bit over a $2 trillion plan to go in and actually start junk bonds. And junk bonds, of course, are just bonds that are, at one time, Kmart used to be a junk bond, Enron was a junk bond, WorldCom was a junk bond, to kind of give you an idea of what a junk bond is.
Well, that doesn't sound like a very good idea, does it?
No, it's not. It's once again the U.S. taxpayer is bailing out people that make bad investment decisions.
Yeah, because the Fed is buying junk bonds, and if those bonds fail, then the persons left holding the bag are the U.S. taxpayers.
That is correct.
So why are they doing this?
Well, it kind of comes back, back to the too big to fail thing. In 2008, they were going out and buying, warrants in banks. This time they're buying bonds of small companies like Delta Airlines, Boeing, and things like that to help prop them up. It's just another way for those companies to tap into a cash flow source, and that cash flow happens to be the taxpayer.
Well, what about this whole too big to fail argument that they use time and time again whenever there is a financial crisis? Why not let them fail?
Well, the government views it as if you let them fail, it basically ends up a whole lot of people end up losing their jobs. And, of course, the government views it as that's a bad thing. But in my opinion, they should just let them fail, because every time you go in there and you bail a company out, you're just sending a message to everybody else saying, well, hey, we can just roll the dice as many times as we want to, and if we do lose, well, the U.S. government will come back and bail us out.
But there's no merit to the argument that huge corporations, especially financial institutions, if they fail, it has a ripple effect across the U.S. economy, making a bad situation even much worse. No sense to that argument?
No, if a company fails, I don't think it has that big of an impact. This situation might be a little bit different because there might be a lot of big companies that will go under. But again, the companies that did their jobs by not going out and spending hundreds of billions of dollars on stock buyback programs, those companies are sitting with tons of cash that's going to help them weather this ordeal, and they're not going to have to use a government bailout. But guess what? They're probably going to sit back just like when you view socialism. Hey, my next door neighbor is getting something for free. Why should I do the right thing when I can go ahead and mess up and somebody still has my back?
Mark, how much longer could they continue doing these kinds of bailouts without the whole economy collapsing for good?
Well, right now the Fed's balance sheet is hit $6 trillion this week, so that's only about 20% of GDP. So they have a lot more room. You compare that to Japan. Japan's central bank now has gone to like 105% of the country's GDP on their balance sheet. So the Federal Reserve still has a lot of room to push this, but I think it's a bad idea to push it.
So this is not heading in a good direction long term.
Correct. You're sending the wrong message, and it probably wouldn't be a problem if the Fed did this kind of stuff and then would repair their balance sheet. But they're going to get their balance sheet in a bad position, and it's going to keep on growing. There'll never be a pay down of that debt off of the Fed's balance sheet.
Now, is this the first time that the Fed has gone for junk bonds of this magnitude?
This is the first time they've ever done junk bonds. They have done mortgage-backed securities and treasury bonds in the past, but this is the first time they've actually dove into the corporate America side of the capital markets.
So it's a desperation move.
I don't know if you'd call it necessarily desperation. I think where a lot of this probably came from is a lot of these small business loans that they're passed in the stimulus bill have now already been exhausted. They went into existence last Friday, and now they've already completely been tapped out for so many companies going and tapping into them. I think this was just another way for the Fed to get around Congress bickering over signing an extension of that. This was just the Fed's way of kind of put a Band-Aid on the problem between now and when Congress can fix the problem.
All right, Mark, shorter range predictions about the stock market. Now that they're saying that the coronavirus curve may be flattening, and with all these bailout purchases by the Fed, by the stimulus bill with the federal government, multi-trillions of dollars, is the light at the end of the tunnel brightening significantly now, coming significantly closer to get back to normal?
We are getting back to closer to normal, but my concerns is kind of what kind of shock has this done to the economy. As Warren Buffett has always said, you don't know who's swimming naked until the tide goes out. My concern is you saw this happen in 2000 and in 2008 with Lehman Brothers and Enron. When the economy took a big hit, those companies went under, and you didn't know they were doing bad stuff until that economic event happened. So my concern is here, how many other companies have been doing this kind of the same stuff that Enron or Lehman Brothers are doing, and it took this event to uncover it, and we may not see those companies for another, month or 2 months down the road.
And a month, 2 months down the road, what's your prediction?
Wow, gosh, you really put me on the spot there, Larry. I'd probably say you're going to see some really bad economic numbers, and I'd probably say the economic situation will probably get worse before it gets better. However, this may surprise people, the stock market might actually go up on that news, because right now the stock market is getting a whole lot of free money from the Federal Reserve.
So a few months from now, we may not be in such bad shape, at least on Wall Street.
Wall Street's going to be sitting really, really good here in a few months. I can't say the same for the Main Street people.
All right, we'll see how that turns out. Mark Collinsworth of Vere Global, thanks once again for this Wall Street wrap.